Now, there's talk about disbanding the bureau that's in charge of policing the financial industry, specifically banks, over consumers. Now, my next guest and I talk about what it will mean for consumer protection if companies are not regulated. And joining us here on The Factor Uncensored tonight, we have with us Monica Eton, founder of Chargebacks 911. So, Monica, there's a lot of talk about the CFPB. For the average viewer out there who's not familiar with this entity, exactly what is it?
So the CFPB stands for the Consumer Financial Protection Bureau. And the easiest way to think about what this organization does is it's pretty much like the FTC, only it regulates banks. So where the FTC regulates businesses to make sure that businesses are not scamming consumers and they're practicing fair, the CFPB is in charge of managing banks to make sure that consumers also aren't getting charged unfair interest rates, they have everything disclosed, they're not getting excessive fees.
Now, with this entity or this agency's future being in doubt, is that bad news for the consumer out there or good news?
I think it's mixed, and in many ways, it's very good news, and I'll tell you why. Because I think, everybody would agree that you can have a situation where things can get overregulated, and it's always with the best interests. But what's happened in the industry, especially with the growth of e-commerce and all of this technology, is, we've needed to change and we've needed to innovate. And these banks need to innovate as well. Consumers have driven with their demands for, removing friction, making things easy, making things fast. But we haven't been able to keep pace with the innovation and technology really required to create a fair environment. So in many ways, having a situation where that's not regulated is going to open the door to much needed innovation. And statistically, we see banks have consumers as customers, they have cards, they have, bank accounts. And at the end of the day, the mantra of the customer is always right is still a founding tenet of how our economy works today. We want customer experiences to be good. We want that loyalty. So giving banks the freedom to make decisions in the best interest of maintaining cardholder loyalty or consumer loyalty is actually a good thing. Now, on the flip side, sometimes you can have a good thing that could end up creating some negative consequences. So for example, you could have maybe as a bank, they decide to create a concierge service. And this could be, consumers effective, whenever now if a consumer has a claim or a dispute on a given transaction, instead of going through a rigorous process in order to determine whether or not that turns into a chargeback that creates a fine and a fee for the merchant or for the retailer, maybe the bank has a no questions asked policy. And for a monthly fee, because they're not regulated on fees, for a monthly fee, the consumer could subscribe to a service and they could put forth whatever claim they want. Now, that's good for the consumer. This is what the consumer wants. They want a one-stop shop for their bank to resolve any transaction. But it has a consequence on the merchant, because now the retailer or the merchant may be receiving a bunch of claims that are completely frivolous, and nobody's really checking these. Mm-hmm. So that creates, more friction, it creates more costs, and that's a little bit difficult to manage.
There's always a fear, though, Monica, when it comes to the public, when you hear something about that has been regulated is now deregulated. So for the consumers out there who say, well, who's going to protect us from these banks who may give us high interest rates or may give us excessive fees, what would you tell them?
Well, I think that the economy has grown to a point. Let's look at how the market is today. Margins are collapsing, and this is affecting every single business. So in one way, consumers are protected by that statistic because it's a very competitive environment, and so banks are in fierce competition to be able to ensure that their consumers are loyal. So, you can't turn away a consumer. Losing one customer matters. And so I do think, customers today are more valuable, and that loyalty counts more because it's more difficult to acquire that customer. And with margins being thin, banks can't afford to take too many risks. So if you upset a customer, that has a trickle-down effect, and you're going to upset even more customers. And with margins so thin and the competition so fierce, and we have consolidation going on. I mean, the market is, we definitely have a downturn. Plus the fact that there's some financial insecurity on the horizon. I think we'll see, banks are going to be listening to what their customers want, and maybe we'll see that some of the behavior is actually going to dovetail into what's best for the industry, because ultimately retailers don't make any money, and nobody makes any money if we have upset customers. Customers today, consumers, they want security. Then they want it to be fast, right? We want it to be better. And we also want transparency. So all of these requirements, really to get all four of those things, we have to have better technology, and we need to take some of the shackles off of these banks and allow them to really, innovate and be able to be free to do what makes the most sense for the industry. And I do think we're at a point where, specifically with chargebacks and with fraud, this is a problem that affects every single stakeholder. It used to be just a pain point, that merchants bore, or retailers, but the world has changed, and I think that it's definitely a fact now that everybody has the same enemy when it comes to fraud and friction. And so I think releasing some of those chains, and creating an environment where there can be innovation and people can think outside of the box. We may find that there's enough interest from all sides of the equation to help mitigate some of the risk that may have been there without a regulator.